Welcome back to the channel, everybody. So we're going to begin here. I want to start out here talking about the dollar first, and then we'll work our way into XRP news and some crypto news, etc. I try to keep my eye on the dollar, right? So I saw it looked like the dollar was a little bit weak today. It was 103 on the DXY. You got a lot of crazy stuff going on with U.S. Treasuries right now. All of this affects the new financial system. All of this affects everything, really, right? The price is going up. The price is going down. Liquidity drains. Hopefully, we all are familiar with that as of now. So this article here is from Watcher.guru, but this is interesting, right? Because they're trying to set the dollar up. I'm telling you, the rest of the world, they are tired of having a back seat to the West. They are tired of having their currencies be so weak in comparison. Look, the currencies have a lot to do with power, wiggle room, the ability to grow, to do what you want. And they are controlled by that dollar, and they are trying to set that dollar up. I'm telling you, there's an old saying, pay attention to your circle before they hurt you. And a lot of these countries that the U.S. wants to keep real close, and I think it's more of a keep your enemies closer, keep your friends close and your enemies closer type of thing. But nonetheless, they are not friendly to the dollar in the West. I'm telling you. But anyway, let's read this little tidbit here. It says, if BRICS start using their local currencies when the U.S. is in a recession, it could strengthen their native economies. Keep in mind, they've been pushing heavy with the local currency thing. Don't get me wrong. We've heard in the last month or two about them accelerating their progress towards the common BRICS currency, which obviously has huge implications for the new financial system as well, being a connector once again. Because I saw something recently, and I have to put this out there once again, of the real value in a lot of these bank coins is connecting CBDCs. They don't necessarily have to be used as CBDC technology directly, but connecting them, providing liquidity. That's where the real value comes in, interoperability, especially in a world that's rapidly growing in its problems for liquidity, right? And its siloing of multitude of systems because they don't have interoperability. We've heard it from the Bank of International Settlements. We've heard it from the IMF. We've heard it from one reputable source after another. But anyway, it says local currencies could have their fair shot to thrive when the U.S. dollar is struggling to recover from a recession. Although we've already been in a recession for quite some time. But they're talking about when the dollar is truly, truly struggling. They're isolating the topic here, right? It says, quote, so bringing it all together, we think 2024 will be a year in which currencies and the rest of the world can breathe after being dominated by the strong dollar trend for so long, unquote. We'll see. Now, if that happens, let me say this also, if that does happen and the dollar gets weak in 2024, the markets can go boom. It gives everything a chance. Commodities, it gives crypto a chance, and they can go up. They can play. Now, just imagine a weak dollar and the Fed actually does cut rates or something like that. And I think that they may have to. I think they have to turn that money printer back on. Man, you're looking at a heck of a bull run, the possibility of a heck of a bull run sometime 2024, 2025. And then just maybe I'm connecting too many dots. One could say that, I suppose. I would disagree. But all of that at the same time as all of these different regulations roll out, like MiCA, etc. All of these different places are testing out their CBDCs, wholesale and retail. They're testing that out. All of this, a lot of them to be deployed in 2024. For some reason, at 2024, it looks like a lot of these powers are trying to make that a significant year. Right. So this is coming from Chris Turner, ING's global head of markets. So it's coming from a reputable person. So, we'll keep our eye on the dollar. It says ING predicted that the quote, dollar's long goodbye. I don't even like the sound of that. I would never say the dollar's going completely to zero, but I also, it's like, it's a double-edged sword. In one way, I profit greatly if the dollar is weak, right? But in another way, it's like, if the dollar is greatly diminished, that brings a great deal of problems to the West. A great deal. And not to mention, we're staring down the barrel. It's not here, but we're staring down the barrel of a possible hyperinflation situation in the future. All the proper catalysts are already lined up. And once again, remember, they don't include energy and food. And there is a battle going on right now when it comes to those type of things. You saw that the West actually did their job once. They actually stood up and they handled the oil situation. All right. So that was pretty good. They did good in that way. So it brought gas prices down a little bit. All right. But now OPEC Plus is considering increasing their cuts to negate the solution that the West came up with. Now, if they actually go through with increasing their cuts, holy smokes, that's a bold move. That's a huge statement. And that could be something serious to deal with, because that means that the U.S. oil producers, in order, because you understand oil not only affects energy, but affects food prices as well, they would have to increase their output exponentially when already there was doubts before that they were going to be able to increase. Because remember, a lot of those oil executives said themselves, hey, if we're going to do this, we're going to increase output gradually. So there was even doubts then, but they put boots on the ground and they got things moving. So, we'll see how all of that goes, keeping an eye on those different catalysts. All right. And then Treasury markets is something completely different. We'll get to that at another time. So now let's get to this XRP news here. This article here, which I hope all you had a great week. Oh, man, it was a tough week. I don't know about you guys. I hope you guys had a smooth, easy, great week. It was a tough week my way. I'm going to tell you that right now. I'm happy that it's Friday. I definitely am. Please, leave me a little good energy in the comment section, please. But this is from thecryptobasic.com, and it's titled "Market Analyst Sees XRP Quickly Hitting $1.35 as $100 million plus OI, open interest, I guess that means, enters the XRP market in a day." Listen, even with this consolidation, even with a little bit of a pullback, which it did go down a little bit, then it went back up a little bit. I see it as all being healthy. I do. I don't see any concerns, really. I think we're still in a great position. And all of these good things happening before they flip the switch, before all the banks begin using XRPL-based systems, XRP-based system. We know that's going to take some time. We've heard certain things. Check out the videos in the members only section. You'll see which ones I'm talking about a couple videos back and then the recent one. And you'll see it gives you some pretty good information. I'm working on another one as well. That is going to be very, very potent. But anyway, this is analyst Crypto Insight UK believes XRP could quickly skyrocket to the 89 cents and the $1.35 range after witnessing an inflow of over $100 million in open interest on November 14th. I think over time, there's going to be gradually more interest in XRP. That's going to bring more capital to XRP. I think the news that XRP is in the clear and that you can play with it and there's no problem. I think that spreading is starting to, not just spreading, but people are starting to settle in with that idea. It takes some time for that to settle in because for so long people have been fudded, and that FUD it sinks into the psychology. And so it takes some time to get used to something being open and in the clear, sort of like after the bootlegging days of alcohol. People were still kind of like standoffish with the alcohol and such like that. I know it's a bad example, but I think it's an expedient correlation, right? People were still standoffish with it because it was banned for so long, prohibition, right? So now it takes some time to reverse that psychology, and then people get on board with the idea of partaking in this particular thing. And so you start to see an increase in usage, right? In XRPs. And when it comes to XRP, obviously that means purchasing, trading XRP, holding XRP. So I think that's going to increase. Now we've seen it go up plenty of times, very, very quickly, even recently. So I think, yes, at any time, yes, sure, it can make it to 89 cents. It can make it 89 cents. But I'll tell you what, I'll be more excited when it makes it to $1. That's when I'm very excited. I have fun at all these different price ranges. Don't get me wrong. But I think we need to make it to $1. Make it to $1, then I'm starting to get a little bit excited. Like, ooh, okay, we're cooking now. That's just how I feel. So it says, let's scroll down here. It says the market watcher disclosed this in a follow-up analysis on X. He called attention to the distinctive price movements of XRP compared to other charts he had highlighted in an earlier report. The analyst noted a significant development with over $100 million in open interest injected into the market during the price spike witnessed November the 14th. On the back of the reports of a fake BlackRock XRP ETF filing, they said they're doing some sort of investigation with that. So I guess we'll get some information on that very soon. It says, recall that XRP immediately corrected the gains of that day. Everything happened very fast that day, right? But it was very interesting. I learned a lot from that. Let's move on to another article here. So this article is titled, Top Bitcoin Trader Recently Shared His Bullish Sentiments on XRP. It says, backed by an analysis of the monthly XRP chart in correlation with the asset's Bollinger Bands indications. So let's scroll down here. It says the analyst highlighted these signals in a recent X post, noting that he finds it difficult to not be bullish on XRP. This is a Bitcoin Maxi here. You see? One reason for his sentiment is the Bollinger Bands with BBW. It says, okay. Man, some of y'all, come on, man. Some of y'all immature out there now. Come on now. Let's be mature here. Tony revealed, let's get back onto the topic here. Tony revealed that the current reading BBW of 0.85 is the second tightest ever recorded. What? Wait, hold on a second. Wait a minute, Mr. Article Writer. Wait a minute. You're trolling. I know you are. Why are you writing it like this? Wait. Wait. Oh, man. Hey, man. Hey. This is a family-friendly channel here, folks. You have a dirty mind, all right? Stop it. Don't spread that to me, all right? Come on now. So when the Bollinger Bands width is tight. What? No. You're trolling here. No, you knew how you wrote this. You knew this was going to get some views. People are going to share this around. You knew this. Let's skip that. All right, so they're bullish on XRP. That's pretty much what they're saying. This XRP Maxi, this Bitcoin Maxi. Oh, man. It says another important aspect of Tony's analysis is the observation that the price of XRP is close to the upper Bollinger Band. As of press time, the upper Bollinger Band sits at 67 cents, while XRP trades slightly below at 62. I think it was at 60 cents right before I made this video. All right. Like I said, I'm always super bullish on XRP, but I'm a long-term investor. So I feel like this is going to take some time, but I'll take it. If everything happens quickly, that would be great. Right. All right. So now this article here is titled, and hopefully this one not going to make me laugh. It's titled Ripple Lead Product Manager. We got to have fun from time to time. Ripple Lead Product Manager says upcoming XRPL automated market maker could bolster XRP utility. We continue to hear great things about the automated market makers. It says Cooper made these remarks while speaking with Ari. I'm assuming that's Crypto Ari. It says, will the AMM change XRP's tokenomics? It says, quote, this coming of new DeFi products, particularly automated market makers, is it going to change at all the tokenomics of XRP? The question is asked. It says, for context, there have been discussions within the XRP community surrounding growing assertions that AMM could alter XRP's tokenomics. All right. It says here, as recently reported by the Crypto Basic, crypto author Panos Mekras dispelled any assertions in this direction. Mekras emphasized that XRP's tokenomics are immutable. There you have it. There you go. Making it near impossible to observe such a fundamental change. So Mekras put that to bed real quick. All right. But automated market makers looks like it may be very significant. So now let's go to a little bit more de-dollarization news here. This is from Watcher.guru, and it's titled 3 Reasons De-Dollarization Will Fast Track in 2024. And I'll tell you what's concerning is that so many websites other than Watcher Guru, Daily Hodl, etc., the usual suspects, have been talking about de-dollarization, taking note of such, right? It says the year has seen the BRICS bloc be unabashed in its quest to lessen international reliance on the US dollar. What happens when all those dollars come home? At some point, if they all are banding together to, and this has been happening with increased frequency, if they're all banding together to stop using the dollar at some point in the future, they've been getting more and more countries on board with that. This is something that the common people who still deal heavily in dollars have to ask themselves. I think is also a reason why, look, there's no guarantees. And I'm not saying the dollar's going to zero. Once again, let me say that because somebody's going to jump in the comment section and say the dollar will never go away. I don't know if it will or it won't. Time changes, and change is the only constant. Everything that has a beginning has an ending. I keep that in mind. That is a truth. That is a universal law. Everything that has a beginning has an ending. Nothing is forever, which is a good thing a lot of times. But I will say that I think a lot of, just in case this does happen and the dollar is greatly diminished, a lot of banks, governments, large money individuals are keeping precious metals and commodities on the side. They have some sort of protection to protect their value. And not only that, but that what they're holding will increase if fiat currencies are greatly diminished or destroyed outright. And we've seen not only big companies buying gold, but large central banks buying record amounts of gold until this day. Like that Deontay Wilder meme, till this day. Yes, until this day, indeed. It says, so I think that they're preparing just in case. And I don't blame them. I've been doing the same thing just in case. I'm not playing around with this dollar. No, and its buying power has just continuously been going down. So now, what in the world? A fire truck is going by. Somebody's not having a good evening. I'm telling you that right now. That's very rare. Anyway, subsequently, with this expansion announcement in local currency usage, which I think is a smokescreen, but either way, a new financial system will profit off of either a common BRICS nation currency or local currencies. We will feed off of both of them. They're both siloed and have almost no interoperability. Not only that, their liquidity is terrible. Terrible. But anyway, in their simplification, they have no simplification. Everything is over complicated in their systems. We've been reading about that as well. You can look all of this up. It's not a secret. It says is set to reach new heights in the coming year. Specifically, 3 things could lead BRICS de-dollarization plans being fast-tracked in 2024. The Economic Alliance has welcomed 6 new countries to join its cause. We know about that. It says, moreover, their presence should provide greater assistance to eliminate greenback prominence, which is that's a battle tactic. Like I've been trying to tell people this, most things are happening through proxy. Companies make money by proxy. Wars are fought by proxy. Everything is by proxy. This is a way to battle the West without putting boots on the ground. You battle the West economically. You control resources. You battle for control of the currencies. And if you can't, it's like, if I can't have it, I'll destroy it type of mentality. If you can't control the currencies, you attack it and see how much of it you can destroy. If you can't destroy it outright, you destroy as much of it as you can. You injure it as much as you can. And that gives you an advantage to move forward. It's all about the little movements forward. You get a ton of little movements forward as a strategist, then that altogether is a big leap forward, right? And so I used to have all of these types of debates with my father, not debates, but like discussions on strategy. He was a real good strategist. And so I would just sharpen my mind against his. I was always around him, and he was doing a lot of great things, in my opinion. But his mind I wanted to go against that mind. So I have all of these strategic thoughts because of like how I grew up. I don't know. It's a little random fact, but just to let you know why I think that way. It says, I never like listening to somebody if I don't know them, like at least know a little bit about them. So at least with me, you know a little bit about me. You know what I mean? It says, yet it will combine with other factors that could equate to greater lengths taken in the overall de-dollarization on the block. All right. So listen, we're going to stop there on that article because I want to get to these next ones here. U.S. Treasury. Let's get to a little bit of U.S. Treasury news. We have to keep up with that. So this article is from MSN.com, but it's titled, "Where Have All the Foreign Buyers Gone for U.S. Treasury Debt?" Let's find out what they're going to say. It says here, foreigners no longer have an insatiable appetite for U.S. government debt. That's bad news for Washington. I wonder why. The U.S. Treasury market is in the midst of major supply and demand changes. The Federal Reserve is shedding its portfolio at a rate of about $60 billion a month. Overseas buyers who were once important sources of demand, China and Japan in particular, have become less reliable lately. I wonder why. We all know why. We know why, don't we? Meanwhile, supply has exploded. The U.S. Treasury has issued a net $2 trillion. I kept telling people this. They were issuing trillions. And what does that do to the markets? It causes a liquidity drain if they continue to issue these treasuries and give a higher yield, which they went up on 1 point. I think what was that on the 10-year? So that could bring buyers back. They're trying to lure buyers back. If they're continuously doing that, then where does that capital come from? It has to come from risk assets. It has to come from somewhere. All right. It says, quote, U.S. issuance is way up and foreign demand hasn't gone up, unquote, said Brad Sester, senior fellow at the Council on Foreign Relations. And hopefully they don't continue to do this. This is one of the reasons why prices in crypto haven't gone up the way that they can. Quote, and in some key categories, notably Japan and China, they don't seem likely to be net buyers going forward. Earlier this month, a U.S. Treasury auction of 30-year bonds was met with tepid demand, spooking markets broadly as investors feared more supply-demand disruptions to come. A group of Wall Street executives that advised the U.S. Treasury, known as the Treasury Borrowing Advisory Committee, recently flagged waning demand from two big-time buyers, banks and foreigners. Spaghettios. I'm showing my age now. Over the medium term, the committee said it expects, quote, demand from banks and foreign investors to be more limited. But why? That's the question. There is always the why. In response to recent demand weakness, Treasury has shifted to issuing short-term bonds that are in higher demand, helping to restore market stability. The yield on U.S. 10-year notes, which shot above 5% in October, is now around 4.4%. Foreigners, including private investors and central banks, now own about 30%. See, they need to go and see how they're beating around the bush. They don't want to spook people to tell them why this is happening, right? It says Coombs, who has been buying U.S. Treasuries lately for the first time in 15 years, drawn in by a rise in yields and the chance to compound those returns with exposure to the dollar. If you watch those yields, it's going to tell you a lot. Then you can start anticipating when that drain can happen in various markets. It says, in quote, in the U.S., it might look a bit bleak, but from our perspective over here, you look in much better shape than we are, unquote, he said. All right, so listen, we'll keep our eye on Treasury yields. Trying to see if there's anything else interesting here in this article. This is actually a really, really extensive article. Let's move on here. We're going to close out here with a little bit of gold news, right? So this article here is from fxempire.com, and it is titled Gold, Silver, and Platinum Forecast. Gold climbs amid rising demand for precious metals. Gold gains ground as Treasury yields pull back. You see that? Treasury yields go up, everything goes down. Treasury yields go down, things go up. U.S. dollar is also under some pressure. Didn't I say in the beginning of the video, the dollar was a little bit red. Then you see things go up a little bit green, not everything. Because I think XRP, it went up by like 1 cent. It was like 59 cents. Then it went to 60 cents, but it was still red. But other things like Bitcoin and a few other things look like they were green going up. So it gives the opportunity for some things to go up if the dollar is weak and yields are down. So it says US dollar is also under some pressure in today's trading session, which is bullish for gold markets. If gold settles above the resistance of $1,975 to $1,985, it will head towards the next resistance level, which is located in the $2,015 range, $15 to $2,025 range. And I like the sound of that. Now let's go down here. Silver. Silver is trying to settle above the recent trading range amid a broad rally in precious metals market. In case this attempt is successful, silver will head towards the next resistance at $25 to $25.30. So now we're gonna end off with this here. Little bit of platinum news. I'm very bullish on platinum for the future. Platinum tested new highs as the rebound, and if they continue to have platinum problems at those mining companies, and we wind up having a shortage of platinum when they are going to have continued need for platinum in a lot of these different environmentally friendly things, then that is going to be very bullish for platinum, in my humble opinion. We'll see. Not financial advice, not a financial advisor. It says here, platinum tested new highs as the rebound continued. Palladium has recently settled back above the $1,000 level, providing additional support to platinum markets. If platinum settles above the $900, it will move towards the next resistance at $925 to $935. So now that you have that information, everyone, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, I hope you have a great evening, a great night. Hope you have a great weekend. All right. Let's get to the money.